Bitcoin and gold cage match part 2. Way back December of 2024, I did a video, link below, called Bitcoin and Gold Cage Match. I discussed the relationship between Bitcoin and gold, and I discussed why at that time I felt that 2025 gold would outperform Bitcoin, which it has. Today we're going to re-examine that relationship, take a look at the technical profile and where we are now in that relationship cycle. We'll talk about the timing and strategy of what to do next on the Bitcoin versus gold strategy. My name is Keith Richards. I'm President and Chief Portfolio Manager at Value Trend Wealth Management, and this is the Smart Money Dumb Money Show, and because you're watching, you are smart money. Let's get at her. Now, just as we get started, I should mention, you'll notice I have a different background today for the video. Value Trend's office is under construction. We are having some drywall work done today, and there's dust everywhere, and I actually had to hide in the spare desk in Craig Coyne's office. So this is one of his pictures I've got in the background. It's the best we could do for the video, but we will be back next week in the normal studio. First thing I want to look at today is the relationship between Bitcoin and gold from a correlation point of view. Now, for those of you who don't know what correlation means, it's basically how strongly two assets will move together. So when we look, for example, at gold and the US dollar, the relationship is almost entirely a negative correlation. In other words, gold goes up when the US dollar is going down, and that's exactly what's been happening. But if the US dollar is strengthening, like it was in prior years, gold was underperforming, and I'm sure you guys are aware of that. So there's also a relationship between gold and Bitcoin. It's not as steady as the gold US dollar relationship. In fact, it oscillates. So let's take a look at that relationship on the chart right now. And I'm just going to focus down here. And by the way, I'm using a red color marker today rather than my usual green. Just trying to keep things interesting. So what you will notice is that the relationship between gold and Bitcoin changes regularly. There's no consistency of negative correlationship like the gold dollar thing. And you can see if they start moving in sync, then they start moving out of sync over and over and over. So you and I have to be aware that there is going to be times when they're out of sync. And in fact, it's unbelievable how rhythmic it is. And here we go. We are just now moving into a non-correlated relationship. So let's see what that means as far as trading goes. Okay, so now let's talk about gold versus Bitcoin in a statistical point of view. What Larry McDonald at Bear Traps pointed out about a year and a half ago to me, and I have been using this relationship ever since I learned this from Larry, is gold and Bitcoin can move to certain levels of price relationship before the dance continues to change partners. In other words, when we saw that correlation line a few minutes ago, you saw that it's always moving from correlated to non-correlated very rhythmically. Well, how do we know when that's going to happen? And how do we know when the best time to be owning more gold than Bitcoin versus more Bitcoin than gold? Well, we look at the price of Bitcoin and we divide the price of gold into it. If the relationship is over 30, in other words, Bitcoin is trading at 30 times or more the price of gold, you tend to have an argument to sell Bitcoin and buy gold. And back December of 2024, when I recorded my Bitcoin versus gold cage match video, this is the exact chart that I presented. And you can see that at that time, Bitcoin was trading at 38 times the price of gold. Anywhere over 30, we have found that you're better to get some of your money out of Bitcoin into gold. And you've seen what's happened this year, haven't you? You've seen that gold has most certainly outperformed Bitcoin on a relative basis in 2025. So the relationship stood true when we took that reading way back in December. Well, the other side of the coin is that the ideal time to buy Bitcoin, not necessarily the only time you should buy Bitcoin, but when you should start getting out of gold and moving much more heavily into Bitcoin, is when the relationship moves to a 20 times relationship. In other words, when Bitcoin is trading 20 times the price of gold or less. That tends to suggest that Bitcoin is the cheaper asset on a relative basis. And if we go back to our correlation chart, you will start to see that the zigzag will work in your favor. So where are we right now? Well, remember, you want to buy gold if the relationship is over 30 and hold a disproportionate level of gold compared to Bitcoin if you are still holding Bitcoin. And you want to load up more aggressively on Bitcoin if it's less than 20. So again, where are we right now? Well, I took these readings on October the 29th, and as you guys probably know, the price of both of these assets can move drastically in any given day. So you'll have to just accept that this numbers, the pricing on Bitcoin and gold may not be exactly true by the time you see this video. Case in point though, Bitcoin on the 29th was trading just a little under 114,000, and gold $3,700, I should say, both in US dollars. So gold to Bitcoin, if you divide 3,700 into 114, you come up with approximately 30 times. Remember our relationship, if gold to Bitcoin, I should say Bitcoin to gold, is 30 or higher, you should continue to favor gold, and that's been the situation. So we're still in that continue to favor gold, but remember, almost a year ago, back in December of 24, that relationship was closer to 38. Now it's closer to 30. So obviously the relationships come down, Bitcoin's getting cheaper. Now let's look at the charts. So now let's take a look at the Bitcoin chart. And as mentioned before, Bitcoin has moved into its relationship of underperforming gold. Well, you can see here on this Bitcoin chart, here's way back when I recorded the video around December of 24. It was around 38, 39 times the price of gold. Well, what happened? It fell. It was way overvalued on this relationship basis anyways, and it picked up. But since it picked up, if we zoom in, you can see that Bitcoin has been trading absolutely flat. So that means that we have not a negative performance on Bitcoin. It's a relationship of which is performing better. And you can see Bitcoin's been going nowhere for multiple months. The momentum on Bitcoin, when it comes to money flow momentum, when it comes to price momentum like MACD, when it comes to shorter term price momentum like RSI, are all heading down. That's simply because momentum is fading. Now let's take a look at the price of gold. You can see that over that same period that Bitcoin has languished, gold shot like a rocket. So the relationship did prove true to be a pretty good predictor. Lately, gold has been fairly parabolic. So I want to talk about that a little bit right now. We see on RSI that it's moved into an overbought position. If we zoom in a little bit, one of my key indicators for discovering if something is overbought is using a rule of how much above the 200-day moving average an asset is trading. And typically on a stock, I don't like to see too much more than 15% or so over the 200-day moving average. So this red line is the 200-day moving average. And as I said, we're around 3,700 on gold. If the 200-day is around 3,100, just to keep the math simple. The price of gold is around 3,700, again, keeping the math simple. That's somewhere near 20% over the 200-day moving average. So the price of gold, both looking at that relationship and the position of RSI being so overbought, is telling us that there's likely to be some sort of a correction on gold. And that may lead in eventually to the dance partners changing price and changing position and changing relative strength where Bitcoin will be the better place to be. For now, though, you don't argue with the trend. This could continue a while longer, but in my opinion, we want to keep a sharp eye on this because it's likely that eventually the dance partners will change leads. So let's do a conclusion on what we just looked at today. First of all, we talked about the relationship between gold and Bitcoin, and at 30, the Bitcoin gold relationship is still in the zone where you want to favor gold over Bitcoin. Next thing, the correlation, Bitcoin gold correlation just started rolling over. You saw that in the first chart. So this indicates that at some point you'll start to see a turnaround in the relationship where eventually gold begins to outperform Bitcoin. Having said that, that turnaround in correlation has just begun. So now is not the time to start selling your gold and buying Bitcoin. So there's two indicators that are saying that gold is still in the lead at this moment, but keep an eye for things to change. And on that note, we looked at the chart and we noted that momentum for gold, we looked at RSI, we looked at the difference between the 200-day moving average and the price of gold. And we're seeing both of those indicators are starting to suggest that gold is overbought. So gold is still in charge. Gold is still the better place to be over Bitcoin. Doesn't mean you should sell all your Bitcoin at all. That's not the point of this conversation. It's which dance partner's in the lead right now. And the dance partner that is in the lead and is likely, at least in the near term, to continue being in the lead is gold. But we're seeing lots and lots of signs that that relationship change may be coming sooner than some people think. So my conclusion is continue to hold your gold. Wait for closer to the 20 times Bitcoin gold relationship before you start piling into Bitcoin. Now, having said that, that relationship doesn't have to get to 20 times. The closer it gets to 20, the better. But when it gets under 30, you're kind of in that neutral zone and you could start to see Bitcoin outperform any time in that zone between 20 to 30. So at this point, continue to hold your gold, or at least favor it, and start to move out of gold to some degree, not entirely, and start looking at adding to Bitcoin if you don't mind the risk of owning Bitcoin. Bitcoin is a thinner, lesser volume traded security out there. It's gaining respect, but it's still not as widely traded, anywhere nearly as widely traded as gold. So you do have to keep in mind the risk associated with a lesser traded security and a lesser regulated security, I should add, such as Bitcoin. Those are the risks, but we're here just to talk about the relationship. And in my view, gold's still in charge, but that could change in the coming months. Thanks for watching, and we'll see you next week. And don't forget, like and subscribe. We need to hit 20,000 viewers so Rebecca can get her raise. Get on it, guys. You got to help Rebecca. Thanks for watching. See you next week. Hey, thanks for watching. I hope you got value out of this episode. Please like and subscribe below. We're trying to grow the channel and it would really be doing us a big favor. I'm presenting ideas every week on trades that we're actually looking at Value Trend. And by the way, I don't just talk the talk. I walk the walk. I have been a portfolio manager for 35 years. And in fact, I was one of the very early pioneers in technical analysis here in Canada. On my website, valuetrend.ca, you will see a link for our online trading course. And this course is a complete money management system. I do encourage you to take a good look at that and consider taking it. I priced it extremely low because I want retail investors, that's you, to take the course and get value out of it. It's literally my 30 plus years of experience put into one complete step-by-step course. And honestly, I wish that I had had something like this when I was an early investor. It really will stop you from making so many mistakes. I also suggest you subscribe to our Never Miss an Opportunity program, which is our blog and our newsletter. There, you're going to get ongoing ideas, tons of charts, lots of trading ideas. And by the way, we never, ever solicit. We don't send you junk spam and stuff like that to try to get your business. It's for information, because part of my passion is to teach retail investors how to invest properly. I've been doing this, as I said, for 35 years, and I hope that I'm able to pass on some of the things that I've learned through this career as both a pioneer in technical analysis in Canada and a longtime portfolio manager. Thanks for watching. Don't forget, push like, push subscribe. See you next time.